Hi, this is Leona with Bay Area Real Estate Today and also Session Real Estate in Oakland, California. I just wanted to talk about buying houses for a few minutes. The biggest question I get about buying houses is credit. And I actually did a post on my Facebook page to ask what is the biggest reason why people aren't getting any real estate, right? They haven't bought anything. They're 30, 40, 50, 60 years old and haven't made the first purchase. And the biggest issue was credit. The second biggest issue was a down payment and closing costs. So let me talk about the house purchase for a few minutes. So if you do see a property that you like, your agent, myself, or whomever will be able to write an offer for you. So we will communicate with your lender. Your lender will tell us the type of loan program that you're on. Most of the time, first-time buyers do FHA, which is governed by the guaranteed by the Federal Housing Administration, and those are lower down payment loans. So generally 20%, right, to not have any additional cost monthly for your mortgage. The other part is if you use FHA, it's going to be a lower down payment. So it could be 3.5%, 5%, 10%, depending on the home value. So once we get that 3.5%, we can determine if you are with a lender that does down payment assistance programs. So for those down payment assistance programs, they can help you with up to the whole 3.5% that you need, and that you'd only have to come in with the closing costs that could be between 2.5% to 3% of the purchase price. So with that, the seller, depending on what type of home market we're in, may be able to come up with some of it or all of it. If the house has been on the market maybe a little while, they'd be able to help you with some of the closing costs or all of the closing costs. So you may be able to go into a property with no money down, which is a great thing, right? To qualify for those no money down or lower down payment type of programs, we would have to have a credit score of between 640 and 660. Probably 660 would be the closest. 670, based on our FICO 8 structure, is a good credit score, right? If you look on my FICO or Experian.com or any of those types of things, usually 670 and above is good credit. 740 and above is very good credit. Somewhere in the 800s is exceptional credit. So we're not even looking for good credit, right, at this point, at the 660 mark. 660 would probably mean, as far as credit goes, no collections, no charge-offs, or a single very old charge-off. You have a perfect payment history, which means you pay every single bill that's attached to your credit report on time. So every credit card, every car loan, every personal loan, every whatever student loan, whatever is attached to your credit, cell phone bills, all of this type of stuff. So there's different things that I'll talk about in future videos about getting those credit things. So I do have a credit program that you can use to try to get the negatives off. The other part will do the second step in order to start establishing your credit. And so for the establishing of credit, we would need to have at least 3 trade lines. So if you're paying on a car, that's great. That's one good trade line if it's all positive on-time payments. The other thing is you may have a credit card. A debit card is not going to work for this purpose. We're going to actually need a credit card that you're making payments on a regular basis. And I know sometimes we have issues where I don't want a credit card, I like paying cash, I like my debit card. But for this case, the lender needs to see that you can get a line of credit, whatever size that line is, and be able to maintain it with on-time payments every month. The other thing is you're going to need a third trade line. I know a lot of people are using this, what is it called, self-lender. You can use self-lender, or you can get another credit card, and I am not advising you to go buy a car. I'm not advising you to get another credit line or loan program or whatever, but 3 basic credit cards will probably work for you. Just get credit cards. Just get a credit card. start working on that, then get another credit card, maybe 6 months later, start working on that. Get another credit card probably 6 months after that and start working on that if you have no credit at all. Secured credit is going to work great, right? So the Discover cards, what else? I have a credit card that we offer for my program. It doesn't really matter, just get yourself. Capital One has a good credit card to get you started and start building. Now, when we start building, I don't want this video to be long, but when we start building, I want to make sure that you are keeping that utilization low. So utilization means how much of your credit card you're using as far as percentage, right? So if I had a $1,000 credit line, so my utilization, if I use none of the credit, right, it's zero. If I use half of the credit, it's 50% utilization. That's $500 balance that I'm carrying on that credit card. Credit bureaus really like you to be under 30%, so 29%. So in that $1,000 scenario, $290 is all you're carrying. It's really, really great, and you'll probably get closer to that $660 if you keep your credit under 10%. So the further under 10%, the closer you get to 1% is great, and you'll really be doing well. Me personally, I like to pay off all of mine. That is not a strategy that everybody uses. I understand that. So I like to, every month I pay off everything, and I come into my new statement dates with a zero balance. So mine says I have an exceptional credit history, but like I said, that's me. Everybody doesn't have that same scenario. But if you pay your payments on time, you keep it under that 29, between 10%, 29% ratio, don't go over 30%, that's excellent, right? And I'm not telling you to not use that $1,000. You can use $1,000, you can use the whole thing, but then pay it down to under 30%, if that makes sense. So if I just use $995 on that $1,000 credit card, I got to pay it all the way down to $290, right? Or work my way toward $290. So keeping a payment history, keeping those minimum payments. So if you can't pay it for whatever reason, set up those automatic charges on your card in order to say, okay, I'm going to make sure I can't get to it right now, or I forgot, or I'm on vacation, or I'm not feeling well, whatever the case may be, and that $20 or $40 is automatically going to get paid on time, and then you can start working on paying the rest of that balance down. The other thing is you can also pay multiple times. So for those of us that get paid weekly, let's say, or more than once a month, then we maybe can put a little portion of that toward that credit card balance. So you can pay every week, you can pay every couple of days, whatever makes you, twice a month. Whenever you get paid, you can start hammering out that credit card debt. The other thing I would be thinking about is, if you do already have established credit that you're working with right now, then try to get that each of those credit cards or credit lines, not cars and not houses, but each of those credit cards down to under 30%. What I would do personally, and this is what I have done, I've lined up everything, all the balances that I owe, put them down on a piece of paper or on my phone or whatever, and put them in order of lowest to highest. So I've got one that's 150, one that's 175, one that's 300, one that's 450, one that's 500, and so on. So when I get my check, then I just go, 150's gone. So now and then I put that same 150 onto that other one until that one's paid off, or whatever your balance is, right? If it's 100, if it's 150, it's $50, whatever. But if you can come up with the extra money to start whittling those down, and then cutting out the ones that are the smallest, and then keep applying that same balance to the next highest, and then put that balance on the next highest, and put that balance on the next highest, you'll start to see some success, right? And if you actually pay these things down, and this is positive credit cards, not delinquents, not charge-offs, not collections, we'll talk about that on a different video. But if we can get these down, then we can start seeing the Credit Karmas and the My Ficos and the Experians and whomever else you use to monitor your credit history. We can start seeing those payment histories going back to excellent, right? Your utilization is going down, your payments, because you're setting up automatic payments for at least the minimum, and then you can come back later in the month and pay for work toward that balance, getting that balance down, then you're going to start seeing those credit scores really climb, and we can get to that 660 score. Then we can get to the FHA programs with the down payment assistance and so on and so forth. So on. It's a lot of information I gave you in about 10 minutes. So I want to make sure that you can rewind this video and watch it. If you have any other questions or feedback, don't hesitate to call me and find out more information. But I guess the target of today's video is the path to the 660 FICO score and opening the door to home ownership. You guys have a great afternoon.